Good morning, good afternoon, good evening, folks. How you doing today? We have a topic that Dion and I have been thinking about for a while. We're just going to wrap, and that is how much money does it take to retire? So, Dion, when you think about this question, what are some things that jump out first?
First, no one wants to hear me rap. uh, but
Fair enough.
howdy, Mike. I'm ready for round two.
Yes.
When I think of this, I actually think of how many people overestimate
Yeah.
how much money they think it is that it takes to retire. We hear things tossed around like 25 times your annual income or the 4% rule. And when I look at how I invested and how little money it took and how much, and I've actually heard you talk in one of our videos before of how much you actually invested capital out of your own pocket, that I'm curious why so many content creators and educators talk about it taking millions and millions of dollars to retire,
Yeah.
when I was completely financially free, spending less than $400,000.
Yeah.
And a lot of that money was actually money that came from assets. So it wasn't like it all came out of my pocket.
Exactly.
Um, so
Yeah, that's when I get this question, I get it in lots of different flavors. Everybody leans on I got to be a millionaire. Sometimes the range seems to be between a million and 2.5. Like there's some magic number in some account somewhere that if I get there, I've made it. And often it's because of the 4% rule, right? Figure out what you can extract 4% a year and just, all of that stuff. But that is so not the case, right? And first and foremost, I think a net worth, which is the 1 million or $2.5 million number, is the wrong question. It is absolutely the wrong question. The answer is, how much do you spend a month? Right? If you know what you spend a month, I can tell you when you can retire. Because if you spend $500 a month, you probably can be financially free pretty easily. If you spend $50,000 a month, not so easy. So for me, it really comes down to when I get a question like, how much does it take to retire? It's like, well, tell me about your spending. What is the minimum, right? We did that. Remember, we did an Excel spreadsheet called choices like 2 months ago. And we're like, okay, Dion, you have three choices. What are you doing now? What's the bare minimum? All right. And then if you want to live big time, what do you want? The end of that exercise was, okay, well, Dion, you're financially free. So you have a negative number. Congratulations. But if you wanted to go big time, it was like 30 grand or something. It was just much bigger, right? So it's all about your choices. What do you need to, you just ask yourself, what do you spend every month? What's the minimum you could spend? Because nobody wants to live in a car. So what's the minimum you're willing to accept? That's the answer. And most of you can get by with, hundreds of thousands of dollars invested in quality assets. And then when you compound it and you hold them for time, it's just so powerful. So I think the financial industry breeds a notion of you have to have $1 million. You have to have $1 million. I've never had $1 million. I won't ever have $1 million. I don't want $1 million. It would just depreciate. I'm just that's not a good idea.
you try explaining that to somebody that you don't want $1 million without having enough time to actually explain it.
Yeah.
So
I don't want $1 million.
I covered the topic recently of how to find your freedom number. And a lot of times when I ask people, what is your freedom number? What do you think it is? They start thinking of how expensive it would be to live whatever lifestyle they want. Mm-hmm. And to me, the easiest solution is to get an average of your last 3 to 9 months of what it's been costing you to live, because this is the life you're choosing to live while you have the expenses of working.
Yeah.
When you stop working, you're going to pay a different format of taxes. Earned income, work from work, is the highest tax there is, pretty much. You're not going to be saving for retirement because you're retired. You're not going to have the travel expenses involved with work or anything else that you have to spend. You could be daycare, could be other expenses. Mm-hmm. You don't have to live in an expensive area where the work is located. You can live where you want to. Mm-hmm. And so if we look at those expenses that we have been doing, it's easier to find out what our freedom number is. And once you have that freedom number, knowing how much money you need to make every month is a lot easier way of figuring out how much you need to invest. And the 4% rule, and I love trying to explain this to somebody with a master's degree in economics, accounting. Which one was it?
Econ.
Okay. Because this is the kindergarten version of what I think it is.
Okay.
The idea with the 4% rule is historically, the stock market sees a gain of 10%. If you go back 100 years, there is a lot of this going on, but the trajectory is an average of 10% a year, which means you can take out inflation and you can take out taxes and you can take out 4% to live on, and your principal will not change. On the studies that they did in the 70s, over like a 25-year period, the success rate was 98% or something of always having enough money, even with the biggest crashes. So to get to 4%, if it takes you $40,000 a year to live, you need to invest $1 million. If it takes you $40,000 a year to live and you invest in real estate, it doesn't take you anywhere near $1 million. I'm going to quote you, probably wrong, hopefully not. You've spent around $300,000 out of your own pocket to amass 180 rental units. Financial freedom multiple times over. I've spent around that, probably maybe a little less out of my own pocket, more from the cash flowing assets. And it definitely didn't take me earning or ever having $1 million to invest to get the 4%. So that's kind of the stocks versus real estate argument that we're not having today.
Yeah. No, it's I just wish people would step back and really realize that financial freedom is not a net worth number. I actually think net worth is the most overquoted and frankly, not important number. It's all about what do you live on every month? And do you make more or less than that? Because I know people that make $1 million a year in software, but they spend 1.2. They're miserable. They're living on credit. They're one bad year from being bankrupt. And then I know a couple of people that make less than 60 grand a year, and they're happy because they spend 30. Right? It's not a net worth number. It is the most important financial statement, folks, is the cash flow statement, which almost nobody understands. Right? It's the net worth, or what's called a balance sheet. Then there's an income statement, and then there's this one over here that the accountants and econ people play with called the cash flow statement. That is the most important one. And I just wish more people understood, where does the cash come from? Where does it go? That's why the spreadsheet in my course that you're a part of, it's all about the cash. How much cash do I put out and how much cash do I get back? What's the yield of my investment? So it's not a net worth number.
No, and the great thing the other day is I was talking with Matt, the lumberjack landlord, and I think a few more people should check out his channel. I love the way he puts his information together. Dropped out of high school in the 9th grade. Yeah. I don't share this too often, but now my kids are over 18, so I don't feel like I have to parent them so much. But I made it through high school with a 1.1 GPA. 1.1. Like, what will it take to get me in the Marine Corps? Like the lowest I could, what does it take? Because I went to school like 2 days a week, worked 2 jobs. I was at 16, living on my own, was renting a room. Wow. So school just had no meaning to me, except it was the barrier between me and the Marine Corps. Got it. Okay. So I made it through. I've never had a lender, ever. I've never had an employer ask me what my GPA was. Never. Or to see a report card or an attendance record or anything. They drill it into our head as a kid that your education matters so much. Lenders have said, in the beginning, it was, let me see your credit score, let me see your proof of income. But on my last few, as my portfolio is growing, it's, let me see your cash flow report. Yeah. What does your income statement look like? Exactly. So you're 100% right. That's what people should be focusing on, is how can I make money that doesn't involve me working? And when that money coming in is more than it costs me to live, you're financially free. Yeah. And that's when you can retire, but I don't see either of us ever actually doing that. You say you're retired, but I see how many videos you put out. You're not fooling anybody. Yeah. Fooling myself. I fool myself. But yeah, that's the idea, folks, is if you step back, again, I really think financial freedom is identifying your freedom number. Step 2 is understanding and tracking your expenses and figure out need versus wants, right? Cut out your wants, take care of your needs. Do that for a duration of time. Is it 1, 5, 10 years, depending on how big the freedom number is? And then go buy cash flow producing assets that are conservatively financed with 30-year debt. How do you build a portfolio over 100 units with such a little capital? Time, 1031, cash out refis. I mean, if I were to go back and audit all the cash I put in and then extract it via other means, I might be negative at this point, right? So it's just, you got to get started. Let time be your friend.
Don't over leverage, be conservative, get on the property ladder. House hack. I mean, house hack would be something I would do in my early 20s if I had to do it all over again. It's just an amazing way to start.
The house hacking in the beginning is really important. Once you've got a few rental properties that are producing income, house hacking, I'm addicted to it, but it's not as important, because if I ever did go out and just buy a house and want to move into it, if I could do like Matt, the lumberjack landlord, did, buy a house that costs about the same amount of monthly payment as the unit that I'm moving out of costs to rent out, and it's still a wash living for free.
Yeah, genius.
But, and I had a thought.
Sorry.
They just go right through. But you talked about getting into debt, and I was in a mastermind group this morning and we were talking about inflation. And I talked about how getting into good debt is a really good hedge against inflation. And people say, oh, we were having this huge inflation. And I'm thinking, yes, the money that I owe the bank is worth less money. It's going to be easier to pay them back. I didn't say that out loud. I don't want people to think that was my goal, to capitalize on the fact that there is more inflation while I have good debt.
Yeah. And the other thing to realize that's happening right now, I just had this conversation with Jonathan earlier today, Jonathan Twomley. Inflation or wage inflation, which I think is going to be the big bugaboo, is really good for landlords. It's just the reality, right? Wages go up, people can afford more to rent, more options, more choices. So yeah, this is very interesting, folks. Again, if you're thinking on a 7-figure net worth is what you need to retire, both Dion and I are telling you, you've got to change the way you think. So Dion, how can people find you?
They can actually find me right here on YouTube, Dion Talk Financial Freedom. And it's funny that you mention wage inflation helping landlords. My video that's coming out as we're recording this, it's coming out in 5 minutes, is on how to set rents in a hot market. Ooh. And I went through how I did it, how I used to do it, and then I've actually done a bunch of research for the video. And rents are going up so fast that that's the hardest part to track, is how fast are they going up? Rentometer's not keeping up. The Section 8 Housing Authority, they're not keeping up, because their decisions are based on historical data, and historical data doesn't show you what's happening now. So wage inflation, which is going to impact ability to pay higher rents because there's more demand, is great when you're the property owner.
Yeah, absolutely. Yeah, there's a lot of things to like in real estate, being a landlord, investor, owner in an inflationary environment. So lots of stuff great going on. And again, where can they find you?
Dion Talk Financial Freedom here on YouTube, and I'm in Bigger Pockets. You can connect with me on there too.
Very cool. Thanks, Dion.